Strategic Wealth Strategies podcast with our host, Alan Porter. Alan, what's going on, man? How are you?
Doing great today, Dale. It's about 96 degrees out here in North Carolina. Looks like we're going to have that weather for about 3 or 4 days now. Super hot. It's in the hundreds with the dew point.
All right. We're going to talk today's topic, lies fee-based advisors will tell you. Alan, this is pretty strong language. What do you mean?
Well, understand this. In the first 3 years of the millennium, investors lost over $7 trillion. This is money the Americans had entrusted to their brokers and financial institutions to fulfill their dreams of financial security and their retirement.
Alan, but we see these commercials all the time that the large investment companies are the best ones to go with for a great and safe return on their money, on our money.
Well, when I tell you about all these lies, but here's the one that's perfect. It's Ken Fisher commercial on TV. First off, they say we look out for the client's best interest. We do better when the client does better. Well, they don't tell you this. They also make money when the client doesn't make money. And they got millions of dollars of lawsuits going against Ken Fisher right now. He always says, "Don't. I hate annuities, and so should you." So I sent a letter back to him. I said, "Why don't you tell the truth about annuities? There's three different types of annuities. There's variable annuities, which have high fees, over 4%, and there's fixed indexed annuities that will outperform and eliminate the risk in retirement that a stock portfolio only compounds." And then, you see these other ones. Okay, what's your number? What's the number that you need for retirement? Well, it's not about rate of return in retirement. It's about distribution of your assets.
Alan, tell us more about some of these lies.
Well, stock picking works. I've heard this time and time again. They tell you, we know which stocks you should own to get above average returns. Number two, we can time the market. Nobody can time the market, but they say we have experts who can accurately predict market movements. Another one, our research works. I really like this one. If you buy and sell based on our analysis, you will beat the market. Now, how are they going to do? They don't know what's going on in the future. That's what they don't even know what's weather's going to be in a few weeks. Tracking record investing works. Another, well, we have money expert managers who, based upon past performance, have a better than average chance of beating the market going forward. I just find that hard to believe. Number 5, we always put your best interest first. Okay, so if they put your best interest first, why aren't they looking out for the best interest of the clients instead of them, where they get paid a fee whether you make money or not? Why aren't they telling them about cash value life insurance and fixed index annuities that will eliminate the risk in retirement that a stock portfolio or bond portfolio only compound? And they call themselves fiduciary. Well, Neil, I'm a certified financial fiduciary, and I know about these risks, and I teach people about these risks. I like this one. We always put our best clients first. Our best interest first. But they, like I said, they don't tell the people about the risk in retirement. Another one, forecasting works. I like this one a lot. How forecasting? Now we know what's going to likely to happen in the next, so you can use that to beat the market. And how are they going to know this stuff? Markets don't work. We know what the correct price of a stock or bond should be, and we can buy mispriced stocks so you can make a big profit. How are they going to know any of this information? It boggles my mind, and they're supposed to be fiduciaries, Neil.
Alan, is there anything else?
Yes, there's 5 deadly investor mistakes.
Alan, tell me what you mean by that.
Well, first off, you've got too much money invested in one stock. And, it's great if you happen to have that one stock and it makes a killing, but what happens if that stock goes down? You've lost everything. Other thing in your stock market portfolio, all it is paper money. It's not yours. You have a partner in this called Uncle Sam, especially with 401ks. Because I've told you before, the average fee in a 401k is 1% over a 30-year period, will reduce your income by 1/3. And the average fee in a 401k is 2.99%. People, by the time they go to retire, will have less than half of their money, and then they get hit with taxes from 20 to over 55%. And they're not thinking about this. They just think that money that's showing on their stock portfolio is theirs. And number 2, don't mistake activity for control of your money. Number 3, mistaking a lot of different stocks and think it's true diversification. Now, Neil, you have to have diversification, but I'm not talking about diversification in the stock market. When the market goes down, the market goes down. But I'm talking about diversification in the different buckets of money you have in retirement. You've got the stock portfolio, that's fine, but you need to have guaranteed income in retirement, like cash value life insurance or fixed indexed annuities, tax-free money, like a Roth product or cash value life insurance again. And then number 5, gambling. Well, number 4, I will stop when I get even. How many times have you heard that, Neil?
Oh yeah,
I hear it all the time.
that's before the number 5 you're talking about. No doubt. To get even, that's the mistake we go to the casino with, right?
Yeah. And number 5, and I've gone over this before: stock picking, market timing, and track record investing. Now, Neil, in the following podcast, I'm going to divulge many truths about money investing, and I think I'm up to about 120 of them right now. But we'll take and we'll go about 10 at a time. But these
Like
are little short things that people need to know.
100%. And it's kind of funny, Alan, when you talk about, cash value life insurance and how what you are able to come up with. It's better to do that and grow businesses, right? And make money that finally you could sell at one point at the end. And that's why you have all these tax people to help you versus hoping the market. I would never invest in the stock market versus investing in starting another business and making more profit again. That's
All
the
right.
truth. But once I get a certain business to a certain level, then you start another one. But it could be forever to grow that business. That's a
Yep.
better investment, right? Because of what you can sell it at one point in time versus a stock that's going to go worth its value drops completely all day long. Instead of getting something that's guaranteed, I think guaranteed and then using your money for other things is a much better idea.
Yes, it is.
And then have that money when you're retired, right? You can cash out,
You're right.
do whatever you want to do with it. Maybe start a business because we're going to be living a lot longer and we are in an environment that you better watch out, right? We're going to be living a lot longer, Alan. I know that the numbers didn't show that, remember, because of COVID, but you have numbers that are shocking how much longer we're going to be living after
Exactly.
retirement.
The people aren't prepared for that.
No, how can like a $1 million stock portfolio is not going to last 40 years for you?
No, it's not going to last 30 years.
Yeah.
Especially at the distribution rate they say is 4%. That's got a 90. It's got a 35% chance of failure.
Yep. And so many people are still trying to follow the way that their grandparents or parents lived. Can't do it.
Nope, it's a whole new ball game now.
So the best place to go is email you at strategicwealth, the number 0 @gmail.com, call you at 910-551-1046, or go to strategicwealthstrategies.com. I can't wait to the next parts because honestly, this is the stuff people were afraid to talk about. Now, you going and laying out these financial firms like this, they're not very happy, are they, Alan?
No, they're not.
Because it's a big part of the game. It's one of the big industries that people make a ton of money on.
Exactly. They make a ton of money of your money.
Right. And I hope to talk at one point about those hedge funds and how don't even mess with that stuff.
All right.
I appreciate it, Alan. All right. That was the Strategic Wealth Strategies podcast.